Welcome back to the channel, guys, and today we're going to be doing a deep dive into what the price of gold does during times of uncertainty and doubt, fear, uncertainty, and doubt. So if you're liking the content, please subscribe to the channel, drop a like, and leave a comment, and let's get right into it. So let's start here, and pretty much I've documented all of the major wars that the US has been involved in the last 40 years. And I didn't really go back here because back then the US dollar was pegged to gold. So essentially the gold was very stable. It didn't move up much in price. So if you might or might not know, the Korean War happened in like pretty much right after the Second World War, like in the 50s, and then the Vietnam War happened in the 60s, I believe, and that one lasted a really long time, like 20 years or something like that. So anyways, let's start here with the Gulf War. So if we look at the Gulf War, we see it was announced in July. So essentially it was actually a pretty short-lived war. Oh, and another thing that I should mention is that these red vertical lines represent recessions in the US economy during these times. So as you could see that this war happened right in the middle of a recession, right? And so the war was announced in July. Like there was a build-up in tensions. And mind you, I'm not an expert in war history, so this is my quick research that I did. So there was like a build-up in tensions pretty much from July of 1990, and as you can see, the price of gold went up significantly during this period. So let's zoom in a bit to see how much exactly it went up in this period during the rise of tensions. Pretty much it went up about 20%. I'm not catching it good because I now have this magnet on, but yeah, so it went about 20%. And then I think it began in the following year. So actually I think it began specifically here, or like officially there was like I guess bombing started, I guess officially on this one, I believe it was exactly, I don't remember, but essentially it ended on here on February 1991 is when the war was officially done. So it only lasted less than a year, but as you can see during this period, gold went up significantly, and then it came down, rallied, and then came down into the end of the war. And mind you, gold was in a long-term downtrend during this period, but as you could see, you did have that initial rally, especially with that shock that happened early on, I guess when tensions were building and people were essentially figuring out, I guess militaries were figuring out what was going to happen essentially. Just as a side note, I don't like wars, but I'm just pointing out what the price action does, specifically in this case, gold. So here during the Afghan war, you could see this line here represents pretty much September 11, and then the following month, the Afghan war, I guess it was announced. I'm not sure if the invasion happened exactly the next month. I don't remember exactly, but I do remember this stuff happening back then. I was quite young at that time. But you could see that during September 11, of course, gold is going to rally significantly in September that month. That's when the Twin Towers were essentially brought down. I don't know if I could talk about that on this channel. So YouTube sometimes is kind of strange, but essentially that happened. It's just a historical fact. So you can see the price of gold rally during this period. And mind you, gold was pretty much coming out of a bear market. So pretty much from like 2001, gold went into a massive bull run during this period, right? And it's interesting because this was also during a US financial recession, and this is pretty much on the back of the dot-com bubble. So it collapsed, and then gold rallies. You have a war, then you have another war announced the following year, or I guess in 2003. I guess it was officially, so yeah, so that goes into the next war. So the Iraq war was officially announced or the invasion officially happened was in March 2003. Gold went down, but it continued to rally in this massive bull run of gold during this period. And here, what happened was, I don't really understand these things too well, but essentially Congress essentially voted and pretty much giving Bush the thumbs up, like, yes, you can move forward with the invasion of Iraq. So you could see that this was obviously the months that followed were quite bullish for gold. Then you had a pullback, but then it continued to rally after that, right? Especially the month after the war began, here in 2003. And then here, this is Libya. So you could see the invasion of, I don't know if the invasion, but I guess like military action on Libya began here in March 2011. As you could see, it was bullish for gold. And mind you, this was going to the end of gold's bull run here. This pretty much 11-year long, I guess it was a 10-year long bull run of gold. But you could see it was, initially quite bullish for gold here as well. And then most recently, this month has started red, and I think it could be red this month, but I think the months to come, and if you look at my videos about why I think gold's run is not done yet, I think this could be one of the catalysts that could propel gold into all-time highs in the months to come, possibly Q2 of this year, before then making its all-time high, then pulling back, consolidating, and then going into the end of this decade. I think bullish, but we will see. And we'll take a look at what oil does during this period. And as you would imagine, it's going to be initially bullish, right? So you could see here, this war was essentially started. So we're going back in the early 90s to the Gulf War. So you could see the war, the tension started to rise for this. And the tensions between these countries, I guess, the countries involved in this war started to rise. Once war is inevitable, you see the price of oil skyrocket significantly, because obviously you need oil to run wars, I suppose, right? And this is in the heart of a recession. And you can see it pretty much dump back down almost to where it was previously. Here during 2011. So 2001, and then the following month is when the actual invasion of Afghanistan began. But you could see during September 2011, this was also in the heart of essentially a U.S. recession. You could see there's a massive pullback in this case in oil prices, and I guess this pretty much probably has a lot to do with. I remember during that time that all air travel in the United States was pretty much halted, and there was no planes moving in and out for like several weeks, if I remember exactly. If you remember, drop a comment down in the comment section. But I remember something like this, where there was essentially no flights moving, at least for like a week. So of course it's gonna wreak havoc for the oil industry, right? It's gonna have a massive slowdown, especially in the United States. And I think it might have been even like worldwide. I mean, I know that was also in Canada when that was happening. I lived in Canada during this time. But anyways, the war was essentially officially announced, I guess, the next month. Or maybe that's when the invasion happened. I can't really remember. But essentially it was announced the following month that this was going to happen. And then as you could see, the months to come were quite bullish for oil. And then when we lead into September here, like I said, September 2002, Congress essentially gave the Bush administration the thumbs up to like, yes, you can also now move into Iraq. And then you can see that's actually quite bullish for oil. But then when the invasion actually happened the following year, which was here, so Iraq was announced here in October 2022. The invasion actually started out, or was progressed on, or I guess that's what you would say, the war began on March 2003, and you can see oil pulled back. Maybe that has something to do with oil refineries being attacked during that period, and maybe the supply chain having some effect due to the war. But as you could see, as the war prolongs, is actually quite bullish for oil until you get to the 2008 financial crisis, and obviously there's a massive drop-off in oil. And then here, lastly, this last war over here, before our most recent war, major war anyways, is here, Libya. And you could see once it began, it was quite bullish for oil for the first 2 months. And then it was pretty much just down, and then consolidation to the right before it dumps off significantly. And that leads us to where we're at right now in terms of oil. You could see that this month has been quite bullish, and it's been higher than it's been pretty much since 2025, June of 2025. So we'll see. I mean, if you know, I won't make any predictions in this video, but it's just essentially, as you could see, most of the time when a war begins, it's going to be bullish for both gold and oil. And then lastly, we're gonna take a look at the 1 year U.S. Treasury. So pretty much, so we're gonna go back to the Gulf War, and as you could see, the U.S. Treasury, the 1 year U.S. Treasury has been in a downtrend pretty much forever, not forever, but pretty much since, from when we started looking here in during the Gulf War, it was all the way in a downtrend all the way until pretty much Libya, and then after that it kind of turned around, it hit this low, and then it turned around, and it's, you know, interest rates started going up on those treasuries. So you could see that. So why does this happen, right? So during times of uncertainty and doubt, people are going to run to safe havens, and that's gold and that's U.S. Treasuries. So if everyone is running to a U.S. Treasury, they're buying U.S. Treasuries, the price of each U.S. Treasury is going to go up. And that has an inverse relationship on the yield. So if the Treasury becomes more valuable, it costs more to actually buy one Treasury, the yield is going to go down. So that means you're not going to get as much of a return on your money. And that's because everyone wants it. Right, it becomes more of a supply and demand issue. So you could see that the price of the treasuries actually went down during this period, and also because you're in a recession as well. So it's both things play a role as to why the yields on the treasury are going down. Same thing here, right? You have you have September 11 happen, massive drop in U.S. 1 year treasuries. So. And then it's a continual downturn from there. We have the announcement of the war. Well, I guess this was the war in Afghanistan here in 2011, right after September 11. And then in 2022, we had the announcement of the Congress giving the Bush administration the thumbs up. Yes, we could go to war, or they could go to war. Not we, not me, not you guys, I hope. And then, you know, the treasuries continue to go down. There's more demand, people buying more treasuries. The yield, the price of the yield, or the return on your money keeps going down. And then the war officially, boots on the ground invasion of Iraq is the following year in March. And then, as you can see, the yield continues to go down until it turns around and it starts to go back up, right? So, and then Libya, same thing pretty much, although that initial month was actually bullish for yields, and then it collapsed and went further down. So it's just very, very interesting to see. And another thing that I think is very interesting is that you see during recessions, for whatever reason, wars like to happen. And actually, the Vietnam War ended on a recession, if memory serves correctly. But if I'm wrong about that, let me know in the comments below. War history is not my expertise. I just like to look at charts, and I'm very interested in economics. But yeah, so we'll see what happens here. We'll see. I'm of the belief that in the next couple of years we will see some kind of a recession happen. I think we're due for one. And like, if you've seen some of my previous videos, the S&P 500 stalling out, and when you price the S&P 500 in gold, you see that the S&P 500 is actually in a downtrend. I think these are two major reasons as to why I think that in the next year, maybe 2 years, maybe max 3 years, we will see some kind of a recession in the U.S. economy. I'm not saying it's going to be something that's going to, you know, something like the worst recession ever, or something horrible. But you know, maybe something that looks something like this. Causes a little bit of reset. But anyways, I'm getting ahead of myself. That's all I have for today's video. Again, if you're liking the content, please subscribe. It's going to really help the channel out. For all you 14 people that are currently subscribed, I actually have a goal. Hopefully by the end of the year I could get to 100 subscribers. and yeah, and continue making more content, continue talking about these topics that I find very, very interesting, how the economy works. And yeah, and actually before I finish this video, a big reason as to why during times of fear, uncertainty, and doubt, you see money move to safe havens is because the economy is just everybody's emotions, right? It's essentially I heard, I think it was the uneducated economist say this, and I think he quoted somebody that the economy is the mechanical manifestation of everybody's emotions, right? So it's just everyone's emotions, right? So if a war, let's just say a war is not happening, but everyone thinks a war is happening, that's enough to have markets move. People just need, and I'm not saying this one's not happening, I'm just trying to make an example, right? That you just need, everyone needs to think something is happening in order for markets to move in a specific direction. Whether that's actually happening or not happening in reality is secondary. People just need to think it's happening. So that's very, very, very interesting. Markets are in many ways are irrational, right? Because it's just everyone's emotions. So that's something to keep in the back of your mind during these periods of uncertainty and doubt. There's always going to be an opportunity somewhere. So it's good to look at these things, these historical occurrences, if you will, to kind of keep you with a more level head and keep you essentially not get scared, right? Essentially not get scared and make the right decisions based off of, historically, when are good times to get into certain assets. So I hope, again, these videos are helpful. And again, if you're liking the content, subscribe to the channel. It really helped me out. And drop a like. And I'll see you guys next time. Take care. Bye.